All right, and we can start the party. Hello, everybody. Thank you so much for joining us. Today is a special one, which is that we have Brent Everett, CIO of Generational Wealth Partners on today, and our very own Bill Cannon, Head of ETF Portfolio Management at Valkyrie. Brent, thank you so much for joining us today.
Thanks, Lori. Glad to be here.
Thank you. And Bill, how's it going? How are you?
Good. Weather's getting better here in Chicago. Looking forward to the spring. Thank you.
I bet. Relative statement, because I'm in Nashville. It's a little warmer than you, but
yes,
definitely.
No need to brag. No need to brag.
Just a little bit in the morning. No, this is perfect. Everybody, thank you so much for joining. Just as a high level recap at Bitcoin Answers, we're going to start off with Brent, where I'm going to ask him a little bit about himself and his firm. And then Brent is going to be asking all the difficult questions to Bill. And I will hopefully come back in at the end and toss some questions from the audience to them as well, and then close us on out. So Brent, I will start with you if that's okay. Can you tell us a little bit about your background and how it led you to where you are today as the founder, CIO, and partner at Generational Wealth Advisors?
Happy to do that, Leah, and I promise not to call you Lori again for the rest of the presentation.
I don't mind.
It's not fair to have two people whose names start with L, and I need a third cup of coffee. So I actually started working in the semiconductor industry and did that for about 15 years prior to deciding that I wanted to launch an RIA. But around 1999, so, getting into it just in time for the bursting of the dot-com bubble, I had decided I wanted out of the semiconductor business. It was incredibly cyclical and a lot of the jobs were moving offshore. And I was looking for something to do, kind of got dragged back into semiconductors in a consulting role by another firm up in New York, and was working on some consulting projects for them, and found that I was really spending more time managing my portfolio than I was out hustling new consulting contracts, because it was a lot more interesting. And soon after that, friends, family members started coming to me saying, "Hey, you seem to know a lot more about this than we do. Could you help us out with our portfolio?" So the answer was invariably yes, I'd be glad to do that. And so I kind of built a small RIA without charging anyone a fee, and then decided, hey, I'm spending all my time on this. I probably should just monetize it and make it into a business. And I did. So this all started in the back bedroom of my house. And it's tough to start a fee-only RIA because your cash flow is very limited in the beginning, unless you happen to have connections and some very large clients who are going to take willing to take some risk on you in the early days. So continued to work a full-time job and run the RIA at the same time, which was challenging. After a few years, I had built that up to have a decent amount of assets under management, and had some partners that were interested and joined them. And we started a company called Talus Advisory Services in 2005. Partner joined me in 2006. We continued to grow the business, kind of moved from being more portfolio management oriented to becoming more financial planning oriented, like most firms do as they evolve. Hired some great staff members. In 2017, we had a company attempt to buy us, and the offer was good, but the culture was not a good fit. And so we decided we'd take a pass. And shortly after that, in early 2018, got introduced to some of the executives at Generational Group and found that they had been looking to buy a majority stake in a wealth advisory firm, because it's just such a fit with the M&A business, obviously. And there was a good cultural fit with Generational. In fact, I remember in the early days taking a look at their list of core values that they had come up with and our list of core values, and they were almost identical. They just aligned, and so there was a lot more trust in this situation than there was in the previous one, and we sold a majority of the company to Generational in October of 2018. It's been a great ride. There's obviously a great fit there because we have these M&A clients that have our liquidity events as a result of the process. And, at the same time, we've been walking alongside these guys and helping them with financial planning, helping them with, planning from a tax and estate standpoint. And then when they do exit and eventually sell their business, we typically are the ones that are the recipients of their AUM. So it's a great business model for us in terms of client acquisition and just the access to, literally hundreds of high net worth clients every year. So just makes all kinds of sense. And that's the nutshell of it.
That's very interesting. And how, can you dig in a little into your overarching investment philosophy and also, how you were first introduced to digital assets?
Sure. Yeah, I'd call it evidence-based. What we do is both simple and complex at the same time, in that we believe that there are certain factors out there that provide additional return over time, and we tend to tilt portfolios toward those in the equity space. So we believe that we still believe in value. We think small cap stocks have a higher return than large cap stocks. We believe in a great deal of global diversification, and we probably run with a higher percentage of international and emerging markets allocation in equities than most firms do, much more in line with the global market cap. It's been a good thing this year. So we've been working with alternative investments for a long time, really since around 2009. We've been focused on understanding and being able to provide benefit to our clients through an allocation to alternatives. And that's been an interesting and not particularly easy path because back in that time period, most of our clients were mass affluent and they weren't qualified purchasers. So, what's available in terms of alternative investments, mostly liquid alts at that client level, they haven't been particularly great. They've been hard to analyze. There have been, I think we can say that liquid alts have been disappointing overall. So it's hard to find the right fund there. But we've found a few that have done pretty well. As our practice grew in probably the 2014 forward period of time, we had started to work with more high net worth clients, and so we had the opportunity to work with some top tier hedge funds, and we believe that they can certainly add value and do some pretty amazing things. That part of our business has grown. It's typical now for us to work with a client and have an allocation to hedge funds, to private equity. We do think that the 50-20-30 is the new 60-40. And so naturally, digital assets are something that we want to consider, and we probably think that they belong at least partially in that alternative allocation within a portfolio. And I also had a client, brilliant guy, physics major, and ex-CIA, who was very into Bitcoin. And so I learned a lot about it early on through his exposure to it. And so that made me more receptive to it when it started to become more mainstream, if we can speak of it as being mainstream. But yeah, and you know, the relationship that we have with Jamie through working with her at a previous job, and then she moved over to Valkyrie, and you know, exposure to everything that Valkyrie has done in the past year or so has also been a big help.
Well, that's fantastic to hear. And kudos to Jamie, who is wonderful. No, I appreciate that. And it sounds like you've then been aware of Bitcoin for quite a while. Maybe one last question, and then, you know, I'll stop being a dictator and let you have some fun with Bill. Is just, what are some of the questions you're hearing from your clients about Bitcoin and digital assets, and, you know, maybe why you're willing to come on a panel with us today?
Leah, as this won't be surprising to you at all, but most of the questions that we have are around volatility. And so that's always seems to be either where it starts or where it eventually goes. And, you know, what's the right amount of a digital asset, a cryptocurrency to hold in my portfolio? And, you know, where do you think this eventually is going to go? And how do I access it in a way that, you know, I feel comfortable with? And so, you know, we looked at some of the trusts early on, and we weren't comfortable with that, not because of the nature of the investment, but because we weren't really able to integrate it well into our practice using the technology stack that we had. But the ETF solved that problem. So thank you, Bill.
I think that's a perfect segue, Brent. And thank you so much. Bill, I'm going to turn it to you. Can you tell us a little bit about your background? I'm going to go off video, and Brent, I'll let you take it from here.
Thanks, Leah.
Thank you, Leah. Again, I apologize for my voice. I was at a bunch of hockey games, youth hockey games over the weekend, so I might have been screaming at the ref a couple of times. So I apologize for my hoarse voice. Thanks again, Brent, for your time. I'm really excited to have this conversation with you, and thank you. I would love to speak to you later about this portfolio allocation model you came up with. That's a great discussion and an ongoing discussion here at Valkyrie.
Absolutely.
So what I was doing before Valkyrie, I was over at Guggenheim Partners as one of the portfolio managers in their fixed income group. Fortunately, I was able to see something similar to Valkyrie, where I got in at the ground level and was able to see Guggenheim Asset Management Group really grow. I was able to see about assets under management about 15 billion all the way up to about 85 billion in the 15 years that I was there. Before that, I was, as I say, I was like the last graduating class at the Chicago Mercantile Exchange, as well as the Board of Options Exchange, where it was just packed people, flapping, the signs and everything like that, as well as still using paper notes or paper cards, as we used to say, for the transaction. And now everything's electronic, so it just makes everything better and more transparent, obviously. But you know what? A lot of the excitement that comes with crypto comes, I love the volatility. Volatility means opportunity. A lot of these kind of old trading strategies that we used about 20 years ago are coming into place right now because of that volatility. You're able to utilize and enter the market. It's not necessarily easier, but it's more strategic, and it's a lot of fun at the end. It's a good old days are back. So I really enjoy it, and it's as we were speaking before, over the weekend, you see Bitcoin and Ethereum jump up and down 5%, and that's always kind of a good little. It put smiles on my face of people are trading it over the weekend, and also brings kind of the whole discussion of, maybe the traditional investment vehicle should be trading 24 hours, as obviously everyone's seen the news can definitely affect valuations over the weekend. But again, Brent, I'll leave it up to you in terms of getting questions, and I'm excited to talk about that portfolio allocation a little bit later.
Thank you, Bill. Yeah, I mean, we've got a lot to talk about, and I think it's really interesting to me to see the amount of investment that's been going into the crypto and blockchain space. And I think that last year, venture capital investment into the space was second only to AI and machine learning, and it was approximately $35 billion. I think just that alone helps convince me that there's going to be a lot greater adoption by institutions as we go forward. Can you comment a little bit on how you expect adoption to grow in the institutional environment in the U.S.?
Yeah, and again, I think it's something similar to, and this is just my opinion, but I just see that the entry point, and because of technology, it's something similar to what we've seen with like the internet companies before, right? It was the point of entry is a lot less. The point of, and I specifically come up with a good story where we were talking with one of the mining companies or the publicly listed companies in our mining a mining fund that we just launched, WGMI. What they're doing is that they're raising fund, they're raising money on their end, right? But they're using that capital and deploying it in other international areas around the world, right? And so why do they do that? They're finding opportunities to get into certain spaces, certain locations where the energy grid and the renewable energy sources are a lot more available. But what's the end product? So they are technically literally mining Bitcoin, right? And it just becomes a digital platform, and then boom, it becomes capital for them to use, right? And I think that with that adoption of technology, it's just the traditional story of technology where it's just the entry points are a lot easier, a lot more. There's a lot more opportunity in terms of what you can do with these kinds of products. The money behind it, obviously cash, there's a lot of cash that's ongoing, right? Cash is just so low. You're not going to be, if you park cash in the bank account, it's not getting anything. The rate of return and not necessarily just probably a couple levels of a conservative investment, especially in this technology space, especially in the crypto, are reaping benefits, right? The performance in crypto is starting to be more relevant in everyone's lives. It's starting to become more headlines. Again, I think that just every day there's more stories on smaller companies trying to get into a certain space in DeFi and they're receiving a notable amount of funding behind these kinds of ideas. Again, it's just a lot easier to use. I think the opportunities are there, and I think at the end, it's cash is available for them to start investing.
Thank you. Great answer. I read in a report recently, and I think this was actually put out by Fidelity, that crypto adoption is really low in the U.S. right at the moment as compared to Europe and Asia, and also that about 40% of U.S. financial advisors and nearly 50% of family offices now own digital assets, but only about 15% of high net worth individuals own them. Can you comment on that and what that means as far as further adoption across the U.S. and in those specific spaces?
Yeah. I think it's just, as we spoke before, I think it's just a matter of folks becoming more comfortable with it here in the U.S. I'm sure everyone here on the panel has had some kind of discussion around at the coffee shop or at a party or whatever, that outdoor party you're talking about. And I think just people have to, I think what's keeping people away is the volatility. Perhaps that's a segment, segue into another conversation. But, just like I said, over the weekend, you have a little bit of geopolitical news going on, and you see Bitcoin going up and down 5%, even just over 2% is an incredible move for some, for most equities available right now. I think that people, I think that crypto, Bitcoin is maturing. I think that with that maturing process, people become more comfortable. The products available, like our three products, along with some of our competitors, are always growing. There's always kind of a new product happening every day. Not every day, I should say, but every week. And with that kind of adoption, it's gonna, I don't think people can ignore it anymore. I think financial services firms, banks are definitely already catering to their clients, and especially like folks like us. Like I still consider myself young at 45, but I'm old in the crypto industry, right? And I think that this younger generation, they're seeing a lot more of this kind of wealth management and wealth growth, and they're let's just talk about entry salaries, right? Entry salaries. They're learning. I mean, I did not make that much money as these younger guys are coming in with that kind of wealth. They're looking at alternatives, right? We could also go about portfolio management. They're not looking at, they are looking for other kind of, like you said, alternative investments. That's 60-40. Maybe it should be 60-35. Maybe it should be 55, 55-45. But that leaving that last little bit for crypto, I think it is necessary because it is innovating, it is leading, it's becoming mature. And I think that, here in the US, it's just a matter in terms of what's happening in the world in Europe, maybe it's a different story. Like our colleague, like Jamie says, like we're looking at it a lot more international usage strictly as a currency, right? And because of that, it's a lot more transparent. It's safe. If you have your wallet, it's easy to transfer money. If you're making money here, you can transfer it down to folks, to the family in South America, for example. My descendants are coming from South America, and they are using it as literally a currency. And so I think it's just a matter of adoption. It's just like anything else here in the US. They just want to make sure it's safe and that it's free to use for everyone.
So it's really just a matter of becoming more familiar with it over time.
Yeah.
Do you think there's a particular inflection point where it becomes more adoptable as a medium of exchange? Does volatility have to fall to a certain level, or is there something that's going to trigger that?
That's a great question. I don't know what that event will be. I think that right now you are seeing, and like I said, I do see crypto more relevant, like Bitcoin, as kind of a leading indicator of risk. It's definitely been that was definitely another example was over the weekend, like we talked about before. I do see that, maybe that's an advantage for certain folks. I always kind of looked at risk as using the 10-year, right?
Right.
But it's kind of like, and then I would look at the S&Ps and look at the VIX to see what kind of move it actually is, right? If there was a sudden move, well, if the VIX doesn't budge, then I know that it was just probably some kind of recalculation or something like that. It's not this, but here we do see Bitcoin kind of moving up and down because of this certain situation going out in Russia and Ukraine. And then I do see, like I said, the 10-year is moving extraordinary moves today, right? 10 basis point move today, intraday, crazy. The S&P has kind of been a little bit calm, but again, I think that all kind of all gets together in terms of what people are familiar with in terms of then we could talk about gold, right? Gold's just got a little bit of a rally, it's come down a little bit. Then you see the correlations of Bitcoin. There's a lot of folks are trying to fit Bitcoin where they can. But I think like right now it's a buying opportunity with this, like we talked about, with this little geopolitical kind of like unrest. It's a good time to get in.
Yeah, today's an unusual day. You don't typically see that kind of move in the 10-year and then not see that kind of move in the S&P.
Yeah.
So back to ETFs. I'm very familiar with your Bitcoin Futures ETF, but you recently launched a new one. Can you talk about that new ETF a little bit and what the basis is for that and what you expect from it?
Yeah, of course. So a new ETF launched a couple of weeks ago, WGMI. It is focused mainly on mining companies, publicly listed mining companies. Right now, what we're excited about is that what we found out that the renewable energy firms, the miners that have already established using renewable energy as their primary source, are going to succeed just because, obvious, it's just a lower overhead cost of them receiving the energy. We've also found that what we found very valuable with these companies is also their flexible relationship with their current energy grids. With those kinds of relationships, in case something drastic happens, like you say, like I think Texas experienced a pretty brutal storm a couple of weeks ago, the mining company it was already in the headlines. Mining companies expected to shut down. That kind of flexibility where they could shut down, kind of work with the power grid to make sure people have their heaters on, people are being taken care of, and then turning back up. We find that very valuable. We see that is something in case that they needed to kind of shut down dramatically due to some other reasons. It's okay, right? It's not like a factory just kind of completely shuts down and they're not able to produce anymore. With that said, we found a group of miners that we were really excited about. We've had calls, numerous calls with many of them. And we do think that they are innovating at the end. They're innovating how energy usage and even energy consumption, about how they can help perhaps consumers, become a little more, how can I say, have transform current ways we use energy. The energy sources that these mining companies are using is hydro, solar, and obviously wind down in Texas a lot too. But we're really excited. These guys they're really excited about what they're trying to do in terms of using renewable energy and finding that source. It obviously helps them from a revenue standpoint, but and in a productivity standpoint. And and on top of that, it goes on without saying, we do recognize a potential growth. I mean, exponential growth in this sector in the year to come. We do see a lot of these mining companies expecting, the infrastructure that they need as soon as the second quarter, but definitely by the end of the year. That can transform the hash rate, which is the efficiency metric for the miners. And we look at other various metrics as well. But we're really excited to see the growth. We hope that we can, provide this particular product provides an introduction to the regular investor, and so everyone can enjoy some kind of growth. And on top of that, it's just like there's more mining companies that I had a discussion earlier this morning with a gentleman that he's not necessarily Bitcoin mining, but he is part of the financial part of acquiring real estate with former energy grid factories or energy companies, and utilizing that for Bitcoin. So connecting his transaction with Bitcoin miners so that they're able to get into that untapped electrical opportunity. And so those are really exciting for us in terms of those kinds of relationships and hearing them. And I hope we all get to speak and hear from these kinds of folks, because it is pretty fascinating.
Thank you for that. That's great. And that really was an issue. And so I'm glad the fund is focused on renewable energy, because with energy prices increasing so dramatically, in my mind, I'm wondering, can the efficiencies in mining keep up with the increase in energy costs, traditional energy costs? Mm-hmm. Whether that's hashes per joule or whatever, however you measure it, as we've gone from CPUs to GPUs to ASICs, things have gotten so incredibly more efficient. But there's got to be a limit to that, right? You can't do that forever. It's got to be an asymptotic relationship. So having access or having renewables as an alternative energy source there, I think that's very important.
Yeah, and apparently it's just, I think it's something that we all have to kind of personally, we're trying to, me personally, I'm trying to look at more solar. So I think I'm attending some kind of solar panel here in my own town. So installation and stuff like that. And I'm kind of intrigued by it, obviously doing all this work and see how it could benefit myself and my family.
In the Bitcoin Futures ETF space, back to that product, do you anticipate there being a spot Bitcoin ETF available in the near future? What's your prediction on?
I think I'm going to speak for myself. I don't want to speak, and maybe Leah kind of comes in there, but I do think that the questions being asked in public and generally just the government, the SEC, whatever kind of government related groups, it seems like teams are forming. Seems like more investors are kind of speaking out. It's picking up steam. I would say that this kind of topic has definitely changed language since as early as just the beginning of the year, right? 6 weeks ago or whatever, 6 or 7 weeks ago. Back then, I think there was a lot more coarse language in terms of, or negative kind of themed language towards this particular space. I'm a little more optimistic about it. I was kind of pessimistic about it, like let's just say like 2 months ago. But I think it is picking up steam. I think it'll be here a little bit sooner than anticipated. Again, that's my general opinion, just because of the headlines that are kind of coming about, the general interest, all these kinds of regulation questions. I think that and again, I'm speaking on behalf of myself. I think that regulation should be welcomed by the community. And again, you talked about adoption being comfortable for regular investors. I think that that's where it comes, right? As long as people know that they're being taken care of some way or another, and other folks are making their checks and balances on the product, I think that people will come to like the cryptocurrency world and the ecosystem and start investing and start utilizing all the products available that are just growing every day.
What happens to the Bitcoin futures ETFs if there is a Bitcoin spot ETF introduced? Is there still a place for a futures ETF and a reason to own that?
I think that's to be determined. I think that obviously I could go on about the contango. I could go on about the pros and cons about the BTF. About the futures based product. But the one thing that people have to understand is that, and that was kind of like one of our kind of primary or initial kind of themes, was because you have a regulated investment vehicle trading at a regulated what's it called?
Exchange, yeah.
Trading platform, looking at a regulated investment vehicle as the underlying, right? So you have all security, people jumped on. It's obvious that it was very popular. It continues to be popular. I think with this, I understand, on the other end, probably my former traditional self, I understand about why folks are scared about it. They simply don't know about it, right? They don't understand how that price is derived. And they don't know about all the different brokerages out there, right? There's a good number of them. But I think that number, obviously, like we talked about before, that number is growing, and and people are becoming familiar how everything is kind of valuated, and it just slowly but surely, I think that we'll see what happens. But I think it's probably too early to tell, because while the whole theme is picking up, I think that there's probably a lot more questions to be answered.
I think there are definitely some trade-offs there that will continue to exist. So yeah, I agree. This might be a little bit down in the weeds, but you are the ETF guy, and you did mention contango. Bitcoin futures seem to be persistently in contango, not all the time, but more so than in backwardation. What does that mean in terms of the roll to the next futures contract, and how does that affect the performance of the fund? And how do you determine the optimal point at which to roll to the new contract?
Yeah, no, we have a pretty good strategy right now. Not pretty good. I think that it's an efficient strategy for our product. We do it. We spread out that roll period towards the end of the month. We're approaching that period right now. It is effective. It is the way we along with our sub advisor look at it, is that we are able to kind of always kind of, how can I say this effectively? We make sure that the roll happens smoothly. Fortunately for our product, we are only using front month futures. So right now we will be selling February, buying the March future. And it's gone pretty well. I would say that if we had to add another month to that, the contango would be a little bit worse as expected. But again, going back to what I said, it's a smaller price to pay to make sure investors get that regulated, transparent safety into their allocation, as opposed to opening up some type of wallet. And again, that process is more difficult for others than it's not necessarily. It's an easy process. But maybe, a lot of investors don't want to deal with that. They want to put everything in one portfolio. And I think that our ETF does a good job of getting that exposure into people's portfolios pretty easily.
Oh yeah, and it certainly allows you to spread things out more because you can own, you know, a number of contracts and you can trade them at different points, whereas, you know, it would be difficult for an individual investor to do that.
Yeah. And it's just, and for me, it's just something that I could have an easy conversation with. Anyone can pull it up anywhere. And as opposed to, you know, I don't know, just some people, you know, crypto's not necessarily for everyone. I think that it's going to come that age where they have to, like we said, they have to put in the portfolio. But in terms of like the more like older ways to do it before last year for this ETF, I think that BTF, our product, does a good job of getting that in there.
You and I touched on this in a previous conversation, but I find it really interesting. And do digital assets in general, and does Bitcoin specifically exhibit the kind of trending behavior that makes it useful, that can, you know, traditional trend following methods can use, or the type of things that, you know, CTAs use for, you know, commodities or other currencies that have traditionally been, you know, in the managed futures world?
Yeah. I think Bitcoin is a great introduction to crypto. I think that, like we spoke about before, the technical analysis part of Bitcoin is becoming a lot more easier to grasp. You know, based on traditional how could I say, technical analysis. Our team, you know, the head of research, you know, Josh, he just is doing an incredible job of making and presenting a lot of different kinds of themes that he's seeing, a lot of different kinds of behaviors. And again, these are just traditional technical analysis protocol or process. That said, I think that, you know, this whole valuation will come a little more easier and more relevant for folks. I definitely see that towards the end of the year, like we talked about. Maybe that's that price to pay is volatility. I think you know, like, especially over the weekend when you have these moves, you know, it's only, you know, like maybe 3 to 5% moves. That's not for everyone, right? It's not for you. You certainly can't have any kind of projection or kind of strategy having like, okay, this is gonna, I suppose that, you know, this, with all this volatility, it's going to be kind of trending upwards. No one's feeling that safe about that, you know. But I've become more familiar with it. It took me, and I'll be honest, it took me about like 6 weeks constantly looking at Bitcoin, constantly looking at it. And this kind of volatility, I'm not, it's not only expected, but I almost welcome it. I know that folks are getting in and out. I know that, you know, the sector is definitely growing. The liquidity is very healthy. And I could say that also about our BTF, I mean, our products as well. You could see that the volume is on certain days is skyrocketing, and other days when it's not necessarily volatile is nice and calm, just as expected. And I think that that's kind of, and I think that that's something that those features are definitely what investors are looking for.
Yeah, so that's really good to hear. And you touched on the liquidity and the you know, the depth of the futures market for Bitcoin. So I think it's safe to say that, you know, markets work, and that's, you know, not really an issue in terms of the management of the ETF.
Again, I'm just looking at the price right now of Bitcoin. It's just like, you know, it's this little trend upwards here towards like 38,000 right now. After kind of reaching a low, it seems like about like 36.4 or something. It's just, it's nice. It's nice to see. It's a nice little grind up. And, you know, again, we're only speaking about one market. Let's look at the 10-year. Let's look at equities. Today's not necessarily an extremely extraordinary day, but it's definitely a notable day to keep in mind to look at a little bit later.
Yeah, it's been an interesting day so far,
Yeah.
certainly. So we talked a little bit about technical analysis and trend following. There are people, notably, you know, Taleb at NYU, who has, you know, come out and said, oh, you know, this is just as a Ponzi scheme. This is, you know, Bitcoin has no underlying value. You know, it's a bubble. But what's he getting wrong? And you know, how do you create a valuation model for Bitcoin over time?
Yeah, first of all, I love him. He's one of my favorite authors. I follow him. And I would love to kind of dig into a little deeper into like those statements if he had any research behind it as well. Um, I that said, I don't know
As you know, he's not shy about expressing an opinion.
Oh yeah, and that's what I like about him, right? That's what I like about him. And in reality, his black swan, like just that definitely that trading theory, like with options, right? I mean, if folks looked at like the price of options and seeing like, okay, how about that $100,000 call? Let's see how much it is, or maybe the hundred. Everyone's kind of talking about. I'm just more concerned on more short-term moves, at least for myself, right? I want to see a sustained trading pattern above 40 or even above 50. That will definitely get me going. But let's look at those 100 calls, right? Or even like let's look at those like maybe $10,000 puts, right? Those kinds of trading strategies that he's kind of implemented in terms of the way I kind of see the world right now are relevant. You definitely see like Bitcoin's climbing up to 68,000, 70,000 at the beginning of November. I don't think many folks would really say that we would be over like half that right now, right? I don't think a lot of people kind of predicted that. Maybe there was some technical analysis, and I know there was some technical analysis metrics that would have said like a downward move was probably expecting. In terms of utility of Bitcoin, again, I'm speaking for myself, and I do want to, and I appreciate that question because I do want to dig into a little bit more in my free time. But I think that it's an overall, Bitcoin is just an overall introduction, and there is usage for it. There, a lot of the companies that are investing in it, and not only Bitcoin but also cryptocurrency onto their strategy, into their treasury operational strategy in terms of and then it brings into blockchain, right? It's just kind of an entryway or entry point into the whole world that I think is inevitable into everyone's portfolio.
Thank you for that. And I agree. I mean, I love him. I've read all of his books, and I think he makes some great points. But I think he's probably got this one wrong.
Well, I'm not totally wrong. I would just say I would say that there's points. I think that we probably, just looking at the headline, we just probably have to read in a little more.
So, in terms of greater adoption of digital assets, and the potential for more regulation, do you think that additional regulation will beget greater adoption, and what do you think the time frame will be for additional regulation of digital currencies?
Yeah, I think that it's probably, well, there's two things, right? I think that the regulation should be welcomed. I think that it should be looked at, and in terms of implementing those regulations, I think that I think we're at a minimum of like, I don't know, I think it's like 5 or 6 months at least in terms of what's going to actually happen. That already brings us into election time, right? And we'll see what kind of happens towards election time, right? We're already with that 6-month buffer here. We're already kind of looking at, we'll see how things go. I don't know how the midterms are going to come out and everything like that, but we do know that that both parties have different views on crypto and the acceptance. In terms of what we could do with regulation and everything like that, or in terms of like how the application of regulation, it should definitely be welcomed. And it should be, I don't know. I think it's necessary. I know that I certainly don't like the government coming down. I guess at the end of the day, I'm more of a libertarian, but I mean, it's just, I don't think anyone likes paying more taxes for this or that, everything like that. But with that becomes more adaptability, more people are becoming comfortable. I think that it's necessary. And there's a lot of investors out there, bigger investors, that are waiting for some of that regulation to kind of come in there. I believe that that's the case.
No, I agree. And I think that's going to be, I think that might be one of the inflection points that we've talked about earlier in terms of, greater adoption. So we hear people talk about digital assets and blockchain, and right now it's easy for me to invest in miners. It's easy for me to invest in digital currencies through an ETF. what about investing in a broader sense in blockchain technology? And what do you guys, what are your thoughts on that? And what do you have in terms of a future product or an existing product that would allow investors to get exposure to companies that are doing innovative things other than digital currency using blockchain?
I think probably a good, better question. We could probably circle back with that with Leah, but because I'm more of working with ETFs, I'm trying to get that. I say that I'm trying to bridge that gap between DeFi and the TriFi, or I call it TFI or traditional finance, to become big, to get people to start, just like you said, to start investing in the whole DeFi world, which could be, it's just an abyss of information for them. It's just a completely new world for them. I do think that it's exciting, it's new, it's getting more headlines. I think that there's a lot more, my Twitter feed, I always get, all these new products that are coming out in terms of ETFs, in terms of other kinds of funds. We certainly are, from Valkyrie's standpoint, we have, I could tell you, like, we have like various products, various projects going on for new products. And it's just really, really exciting what's going on in Valkyrie. But again, it's just a matter of innovating. It's a matter of acceptance, and it's a matter of also scalability as well. Trying to get a lot of these ideas that maybe worked with a small group, where we're thinking about, I'm always thinking about $1 billion idea, right? How can I get that, just like you said, that new product out there for folks to understand it, and then ultimately invest in that product and believe in it.
Thank you. Do you have any sense in terms of the ownership of your current ETFs? I know that's really hard to track, but what percentage of that is owned by individual retail investors who are just purchasing that on E-Trade or whatever, versus working with an advisor?
That's another great. I think that the advisor portion is definitely helping. I think those guys are the ones like yourselves. You guys believe in the products. You guys understand the products. You're trying to convey that message over to your investors, to your group. I think that's kind of the main theme in terms of what we see as primary holders of our investments. I think that our products also show great relevance in terms of what you guys are holding. It's pretty obvious what you're holding in an ETF basket. I think other products that are out there, some newer ones, are a little more kind of maybe the correlation is not necessarily there, but I do feel that Valkyrie's products are pretty transparent, obviously, for the daily publication of our holdings. But as well, it's a little more easier to for investors to see how certain companies are adapting to this blockchain, how adapting to Bitcoin on their balance sheet, how they're adapting to changes in technology, changes in the way they are adapting to their client base. Fortunately, like we talked about before, technology is able to do that. Able to get you into that market, but then again, it could swipe it right out right in a second. So I think that we're all kind of in the same boat here, but it's just a matter of again, I keep on repeating myself, people becoming more familiar with this stuff, because I think individual investors, they do know about it. Like the folks that are they're trading before, and like on these electronic digital brokerage accounts and everything like that, they know what they're getting into. We're trying to, at least I feel, I'm trying to get that message and those opportunities into the regular investor, my next door neighbor, my mom, right? She still doesn't understand what's going on, and I'm helping her. God bless her. But it's just like I think that's where we're trying to aim for.
We definitely see a very broad range of understanding with different clients that we work with. There are clients that we work with that come in and say, yeah, they tell us, I want exposure to crypto in my portfolio. And there are others who, would probably run for the exits if we even mentioned it. So it's very it's very much an individual thing right now. We haven't gotten to the point, as you've mentioned many times in the conversation, where there's this broad general acceptance yet. So, but it's coming. It's just it's a question of when, I believe, not if. But when is still a very big question.
Yeah. I'm looking forward to the end of the year. I'm looking forward to Christmas time. I think that by the end of the year it'll be a lot different. It already has been. I mean, you just give this product or this space 6 weeks, and the narrative has changed. I do think, along with our, like I said, with the mining product, I do expect that particular sector to grow tremendously by year's end. Those guys are really excited, not only for the end of this year, but also for 2023. In terms of the companies that we picked out in VBB, I think that those companies are all, again, there's just a new company that we're considering or on deck every week, and we could see some of those changes coming, being reflective on the portfolio. So we're excited about it, and it's back to the good old days. Again, I love it. I love this kind of stuff, and it's just wake up and I'm excited to get going and to dig, to get in the weeds here.
It does show that you love it, and that's great.
I hope.
That's great to see. I eat volatility for breakfast. Yeah, I love it.
Yeah, right. And it's great to be with the team. Our team at Valkyrie is incredible. They are so high energy, so much positive energy that I love and that I crave. And I think the only negative part of my life is just screaming at the refs at hockey games. But that's that's my voice again. But anyway, hi Leah, how are you?
Hey, Bill. Hey, Brent. Actually, I know I'm in here 2 minutes early because, Brent, I loved your question and I wanted to toss it back to you, if that's okay, which is just
Sure.
at the end of the year, come Christmas time, what are we going to laugh about? What are we going to cry about when it comes to digital assets? How do you think the landscape will change by the end of the year?
That is a great question. Let me warm up my crystal ball here
Yeah.
and see what we have. I think there will be greater adoption by the end of the year, but a lot of that depends on how the asset behaves during periods of time like what we're going through right now with the Russia-Ukraine crisis and what we talked about earlier, and I think it's much more important than that is what's going on with increasing interest rates. But I think that how crypto behaves relative to other asset classes this year will be a big determinant of how much adoption we see by Christmas time.
No, I think that's true. And well, I have one more question for you, but Bill has his emoji hand raised, so I just want to double check. And you're on mute.
Apologies, just a disaster here on Zoom. Anyway.
Okay, so Bill's just having fun. I did really like one question from the audience that I really wanted you to answer as well, Brent, if that's okay.
Sure.
Given especially your fund's thesis with alternative investments, the question is, do you think of crypto as an early stage venture capital with liquidity? How do you think of selection within this asset class? And I think you may have an interesting answer.
We think of crypto as very much early stage, which it is, and it behaves a lot like early stage venture capital investments, right? In terms of expected return and volatility. The great thing about it is that it really doesn't correlate to our other alternative investments, and when we're trying to put together alternatives allocation, that's one of the things that we're going to look at is what are those across the alternative investments, what do those correlations look like? And I just don't see that it's correlated to our allocation to hedge funds or private equity or anything like that all that tightly. So it's a useful addition to the allocation there.
I think that's interesting. Thanks, Brent. And Bill, any last words? Otherwise, I think I'm going to close us out here and give everybody 4 minutes of their time back.
No, none. I'm just excited to have these kind of conversations. I think it's helpful for everyone to kind of get these ideas and grievances out. It only makes us all better. So I've had a great time. Thank you, Brent. Thank you so much.
Thank you, Bill. I asked you some tough questions.
And to reiterate what Bill said, Brent, thank you so much for joining us today. Everybody, thank you for being on this call, for watching, for the good questions. We have noted the rest of your questions and hopefully can even put them into one of our pieces. We do publish a lot of content here at Valkyrie. And again, everybody have a lovely day. Brent and Bill, thank you so much.
Thank you.
Thanks, guys.